Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel O'Connor.
This is an all-time puppy here, isn't it?
And Dennis Dick.
I bet a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Friday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim and TD. I'm Trader Spencer Israel, here with Dennis Dick, filling in for Joel O'Connor for the final show of the week. And of course, we have to start with Donald Trump's tweet yesterday. That's why I have the Lockheed Martin chart up right now. We're going to talk about that and how traders are watching Trump and his Twitter feed, and maybe some algos involved there. We also have one earnings stock trickling in and maybe like one or two ratings to discuss. And we also have a question in our chat about the difference between prop trading and retail trading. So we're going to get to that as well. Our first guest will be at 8:15. He is Chris Breter of Simpler Trading. He is a trader for them. And then at 8:35, Nate Toic. He is the investor and the founder of CompleteBankData.com, a great site for small bank analysis. So looking forward to both those guests on our show. Dennis, how's your back feeling today?
I didn't have to crawl to work, so that was good.
All right.
Still sore, but better than yesterday. So thanks for the chat for throwing out lots of different ideas there for my back. I don't know what it is. My back's been good for years, and then 3 days ago I woke up and I hurt a little bit. 2 days ago I woke up and I was like, ooh, it really hurt. And then yesterday I woke up and I couldn't even move. So today I'm on the mend. It was okay today.
So you bounced off the lows, and now you're
yeah, that's what it is. So hopefully I don't retest those lows.
All right. All right. I have the Lockheed Martin chart up right now. This is yesterday after hours, and obviously you know the news already if you follow the market, but I want to read the tweet.
Read the tweet to us, so fill us in there. Maybe people don't know. So give us the details on what Trump said this time in his Twitter account.
5:26 p.m. Eastern Time yesterday. Based on the tremendous cost and cost overruns of the Lockheed Martin F-35, I have asked Boeing to price out a comparable F-18 Super Hornet! That's important. So look at the 5:26 candle on the chart here yesterday, and look how quickly that move was made. And of course, Lockheed Martin now down this morning a little bit. Dennis, I want to focus on not necessarily what Trump said, but how Trump is affecting the markets and what you and other traders are doing.
You gotta follow the Twitter account. I mean, I have it on my screen in the corner, because he will move stocks. And if you were just, looking at all of a sudden Lockheed Martin, you're like, what's the news? Well, he had his Twitter account up, you would have seen it right away. It's difficult, though, because I'll tell you, that went fast. I almost think there's people that have already written news algorithms, call them Trump tweet algorithms, to trade off of what he tweets. And, it's impressive if you've been able to write something like that, to actually read the text, because he's not throwing out a ticker. He's not saying, something, blatant. It's got to be a little bit of an interpretation. A human being can interpret that very fast. Very impressive for a computer algorithm to do that. The reason I say it is because it was so fast. So you're looking at it, and boom, and you look at the tape, and they're hitting that thing, within split seconds. So I think there's a couple algorithms that have already figured out how to trade off of Trump tweets. But, the human being still has a place, too, and it fell like a point in the first minute or so, and obviously we look at Lockheed Martin down 5 points here, so there's money to be made following this Trump account, man. And Lockheed Martin fell $4.35 is down here in the pre-market. Boeing trading up slightly last night. It's still up 50 cents here this morning off of a Trump tweet. He is a mover and a shaker more than anyone else, and maybe more than anyone I've seen in a long time.
Yep, and Lockheed Martin said, we reached out to them, Benzinga. They said they had no comment regarding that. Boeing did release a tweet of their own decrying the cost of the Lockheed Martin 35 program. They say they're committed to working with Trump to deliver affordable products to meet national security needs. Let me pull up the chart here. You did, of course, point out just now that Boeing is trading up. I find the whole thing ridiculous, but what do I know?
Little audio difficulty here. They're just saying that I have an echo. Maybe there's an open mic, Spencer, maybe on the desk. Maybe there's because sometimes what happens is there's an open mic and then that picks up my voice and echoes it. So quickly check that. Hopefully that's the case.
I have checked it. So
Spencer's on it. So I should be good now. I think he's got the open mic closed there. Thanks, chat, for cleaning up our audio there. And and you got to look and you got to respect, obviously these moves. Are they ridiculous? Who was on the show? There was somebody last week and saying that they are faders of the Trump tweets. So basically, they'd be coming in here today and buying Lockheed Martin and shorting Boeing because they say these are so short, little sustained moves. They're nothing really to do with company fundamentals, and that they're just opportunities.
Maybe they're right. Let's look at
to be contrarian as opposed to trying to go with it.
Let's look at Lockheed Martin. The last time this happened, this is a week or two ago.
Boeing. Yeah, I can remember Boeing.
Or
Did he
Boeing?
tweet about? I don't know if he tweeted about Lockheed Martin before, but anyways, Boeing for sure because he was saying about was it an Air Force One or something, and he was going to say it was looking, it was too expensive, and Boeing fell 2 or 3 points on that news immediately on that tweet, and it rallied back and ended up closing up that day. So. The contrary, maybe the play is to fade these tweets.
Let's see. What day was it exactly? Now I'm looking right now. It was December 6th. December 6th. So let's look at...
Stock went down pre-market, and CNBC, everybody was talking about it nonstop. But by 2 p.m., which is what Jimmy A is saying in the chat, he's saying it came back by 2 p.m.
And there it is right there. I mean, you can clearly see it. So
the play here, if that is going to be the case, not always going to be the case, but I always like to be hedged. I don't just like to be one-sided because the market tanks and you're long Lockheed Martin, you're going to lose. But what the contrarian trade is not telling you to do this, but the contrarian trade would be to buy Lockheed Martin and short Boeing against this. And hope that that comes back in, because if Boeing opens up 1 or 2% on this, Lockheed Martin opens down 1.5 or 2%. Well, you got 3% difference from yesterday's close there, and that's what you'd be trying to extract. So that's the contrarian trade to the Trump tweets. I'm going to mark that down just on my paper, maybe paper trade that strategy for a few days to make sure. And I don't paper trade really anything, but it's a good strategy to know. And to see, what happens there. And let's see where it opens, and let's see if, the faders do come in here and buy Lockheed Martin and short Boeing. And maybe by 2 p.m., Jimmy A, it'll be all back.
We'll see. There's one earnings stock I want to cover. Just get this out of the way real fast.
Sure.
This is Cintas, CTAS, reporting Q2 EPS of $1.13 versus $1.15. Sales of $1.3 versus $1.29 billion. They also raised their fiscal year 17 EPS. And their sales are coming in line. So let me let's pull up the CTAS chart.
I went straight down on this report. Maybe it had run up too far ahead of the report. Obviously, this has been a beneficiary of Trump as well, because if you look, that stocks went from 103 up to over $121 on Trump actually got over $122. Close yesterday have been really consolidating around 120, so 120 has kind of been like a magnet for it. And now we get a disappointing report in whatever way the market's interpreting it as disappointing, and we're trading down 4 points in the pre-market at 115.60, bid 116. So it's looking like it's going to be weak. I mean, you start thinking big hole numbers, 115 comes into play probably next, and you also had a double bottom just below that, 114.21 and 114.38. So around 115 looks like a bounce level to me. It did hit that in the pre-market here as well. Fairly light volume this morning, only 965 shares have traded. It was trading actively last night, though, in the 115 handle, so that's kind of where I think it wants to be.
All right, let's get to this question from, who was it in the chat? Who was it? Ethan G. Okay, the difference between prop trading, and you're a prop trader, Dennis, and so explain how that differs from just your average retail trader.
Yeah, so the main difference is access to capital. So when you're talking with a prop firm, think about, and I started retail. I traded retail from 1996 to 1999, and then I went full prop in 1999. And the big reason is that, think about this, if you have $50,000 and you have your 2-to-1 or 2-to-1 overnight margin or 4-to-1 intraday margin, that gives you access to about $200,000. So it's hard to make a living on that, because just taking it to a percentage basis, if you were to make 10% on your money, or let's say you had a really good year, you made 20% on your money, it's only $40,000. I mean, it's hard to live on $40,000. A prop company, basically is funding the traders. So they're giving you access to their capital. So, at Bright Trading, which I'm a part of, with $50,000, just depositing into your Bright Trading account, you can get access to millions of dollars in capital. And now you can do something with that. So you can employ different capital-intensive strategies. It's almost like a little mini hedge fund there. So even when I'm trading at Bright, I don't really think so much about, how much money I have in something. I'm thinking, the size, but I'm never really worried about the dollars, because I know the dollars are there. So I know I can put, $1 million on something, despite, if you didn't have that kind of money. If you're independently wealthy, the need for prop is a little bit less. But if you're obviously not independently wealthy, which most of us are not, it gives you that access to the capital. So that's the main benefit to prop. The other thing is, there's other tools. There's the professional, like environment sometimes, because some of these have offices too. I mean, and the problem is with the internet, everybody's gone home now. But Bright used to have 40 offices across the U.S. So I traded in the Detroit trading office for 10 years. So you're sitting there, and you're right there with a professional environment. You're getting trading ideas from everyone. So that was helpful too. But now with the way the internet is, everybody's doing it from home. There's usually not a lot of stuff going on in the individual offices because everybody's from home now. But the biggest benefit again, and then the other thing to consider is commissions. I mean, when you think about commissions, that's really your major expense at a retail broker. If you're an active day trader and you're spending $7 a trade with a ticket charge, it can get really expensive in a hurry. As opposed to with prop, most of your prop trading companies are profit sharing, and if they are structured with commission, they are often structured at a lot lower rates. So Bright for a lot of years is at 0.4. We're profit sharing now, which is a little bit different. So we're on an 80-20. So basically, if you make $1,000 on something, Bright's going to get 200, we're going to get 800. But at that being said, I don't need to pay commissions. So, you can come into something you don't have to worry about, paying $7 a trade or $15 a trade or whatever you are, because those commissions will eat up your profits in a hurry. So it's difficult to make money because of the ticket charge, and the ticket charge is that $7.99 a trade. So that's the difference. If you're a very active trader trading, and I'm talking like 20, 30, 40, 50 trades a day, it might make sense to go prop. If you're, a swing trader making a few trades a week or 5 or 10 trades a day only, it might still make sense to stay retail. So, but it's an option to explore for yourself. But the biggest, thing is those ticket charges can really add up if you're a really active trader at a retail broker. And obviously the access to the capital is still the main benefit to being a prop trader.
All right. Great, great explanation, Dennis. I wanted to wait. First of all, I want to comment on Stock Hunter saying he got stopped out on that Trump tweet on Lockheed Martin. I think that's pretty funny. So maybe time to short, like you said. That's fine. I found that funny. I want to look at some M&A.
Ethan just asking, just because we got a
Sure.
minute and a half, I might as well just finish the thoughts here
Sure,
on the
sure.
prop stuff. So, what are the drawbacks? Great question here. One drawback, which I absolutely hate, because you have to get licensed. So you need to go write, your series. Well, when I got licensed, it was your Series 7, which is a stockbroker license. Now they actually have a prop trading exam. I think it's a 55. So I think it's a 55. I don't know if I'm getting my number right, but you have to go get that exam. You have to get licensed. The other thing is you start having to pay professional fees. So once you're licensed prop, you're not going to get your quotes for free anymore. And I complain about it all the time. Obviously, the retail broker, I think you have a discounted rate for your quotes, where I'm paying full rate. Like I don't even have S&P futures anymore. I don't get the S&P futures quotes because it costs me $600 a month. So I don't pay $600 a month. But if you're a retail trader, you're not licensed, you can get those for I think like $4 a month. So obviously, there's different fees that they ding you with. There's prop trading fees. So that's one consideration there. But just me being said, I've been prop for 17 years, and I love being prop because I have that access to the capital, and I don't pay those ticket charges, $7 a trade.
How do you get involved with a prop firm?
Well, there's a few. Obviously, Bright Trading, I can put the link in there as my firm, so I can pitch my own firm at stocktrading.com. But just basically, search prop firms. There's a lot of them out there still. WTS is a big one. T3 with Scott Redlew who comes on here. They're a prop firm as well. They take on traders. So you go and you interview with the prop firm. They'll talk with you. Sometimes they will fund you. So I know we often before did take on traders without putting that performance deposit into your account. But a lot of times they want something like 25,000 or 50,000 bucks because the losses. They don't want you just coming in and blowing all their money away. So the losses usually come from your account. The gains go to your account. That's how it works with that 80-20 relationship. But just basically Google search it if you're looking for other prop firms. Ours is Bright Trading. That's my prop firm. But like I said, Scott Redler, who's on here, is WTS. And then he's T3 Live. Sorry, he's T3, which I think has a relationship with WTS now. WTS is one of the big ones too. So there's a number of good prop firms out there.
All right, 8:15 now. Let's take a quick break, and we're going to grab Chris Breter of Simpler Trading. He's a trader as well, so we'll be right back with Chris.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors. This has been Zingo's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick, and now we're joined by Chris Breter. He is a trader at Simpler Trading down, I believe, in Jackson. Oh, no, you grew up in Jacksonville, Chris. How are you doing today?
Oh, fine. I'm in Jupiter, Florida now,
Jupiter,
and
Florida.
our main office, the mothership, is in Austin, so I go there about once a month.
Okay, gotcha. Yeah. I thought at first you were in Austin, but so talk a little bit about your background. How did you get started in trading, and how did you end up at Simpler Trading?
Well, I was originally a paleontology major, went in, decided I'm too much of a people person, went and worked at basically a awful penny stock firm, sort of like Wolf and Wall Street when I first got out of college. Saw people losing their butt trading options, and decided who's the house. Went and basically took a really lousy job in Chicago, but I worked as a clerk on the floor to observe knowledge. After a while, I went to work at a discount firm because they let me trade my account commission free. So I was a discount broker where I just called in orders. And basically, I turned $200 from a plane ticket to enough money to buy a seat on the floor. So then I was a market maker for 8 years on the floor, went to work at a day trading firm for 9 years where I was up there in the top out of 800 people, and then just traded from home and contacted Simpler Trading. They contacted me and started working for them. I've always wanted to teach. I actually taught a lot of traders with this day trading firm and opened 4 offices for them. So I just kept that going.
Chris, what was the name of the day trading firm?
ETG.
Oh, yeah, ETG. Okay.
Yeah, out of New York.
I've been with Bright for 17 years, so it's funny we were just talking about prop firms and talking different. But you touched on this one thing. You were saying market making on the floor. What were you making markets in?
IBM. So I was in the same pit with people like Dr. J. He was an IBM market maker and people like that.
Now, how was the floor different? Let's talk, just a little history lesson for the traders who are just starting. How was the floor different back then than it is now, and why, the move to obviously, get off the floor?
All right. Well, the first thing is I went back there 2 years ago. It used to be when you went to the floor, if you didn't love that kind of energy, you got nauseous from all the noise. It was just like trading places. It was crazy. You go now, it's a library because everything is done with little handheld iPads, electronic. So 75% of the pit is shuttered now. It's awful. IBM, Apple, right, but when it was splitting and all that, you'd think it was busy as one person managing the entire book, all electronic now. When I was on the floor, totally different is you have basically somebody like a discount broker calling in the order, the runner taking it to the floor broker in the IBM pit, and then them representing it by open outcry. Totally different now. You can't get a feel of the flow. Completely different. That was why a seat was so expensive. It's always been expensive because you were ahead of the public. The problem is you got the advent of electronic trading, all of a sudden the public was as quick as you were on reacting to news. And that's where I saw the writing on the wall, sold my seat, and went to trade for an electronic firm.
And what were you trading when you were with when you were with the electronic trading firm? What stocks were you
Oh,
focusing
I
on?
trade everything. I was sort of known out of the 800 people as the most creative. I come up with all sorts of stuff. I would trade anything from a dollar stock to when Time Warner and AOL announced their merger, trading the
Viscar.
ARB because the ARB
Yeah.
was $20 wide. Did that for like 4 years. Traded unusual option activity. Traded, with charts. Obviously, like now, I trade mostly with charts. And that's primarily how I do it now because now it's so much algorithmic based. I have to try to game the system. And a lot of algorithms are really simple, and they're just going on simple moving averages or chart patterns. So I'm basically trying to decipher that prior to it happening.
So you're trying to make your money from those predictable algorithms?
No, well, I'm making money from predictable chart patterns and from
Okay.
momentum, but a
Okay.
lot of times it's a self-fulfilling prophecy because they're watching the same thing, whoever they is.
So you'd say you're mostly technical trader now as opposed to market maker / risk arb trader.
Oh, yeah, absolutely. But I have to tell you, when I was on the floor, most of the people, all they did was trade against the public. So they bought on the bid, sold on the offer. And
Market
I was a
making.
momentum trader even from the first day. I was a little different. And because of that, I gave up a lot of edge. But when it trended toward electronic trading, hardly any of the people from the floor could make money at first because they weren't momentum based.
Right.
So it
So
was a
those.
huge advantage.
So talk about your trading now. You were saying how you watch unusual options. Talk about that a little bit because we have a lot of traders who listen to the show that like to watch unusual option activity. Talk about that. How that gives you an edge.
Sure. Is number one, like I said, I'm chart based, but I combine it with unusual option activity at times. I mean, I don't look at 1,000 different unusual options. I look at some that are sort of compelling, and I try to combine charting with it. So if a stock is in plummet mode and you see unusual call buying, I just dismiss it. I like unusual option volume in the direction of the stock. One of them we were watching was H&R Block back when it gapped down after earnings. It gapped down on earnings, but then out of nowhere, trades 100 options a day, traded 19,000 puts one day. We alerted our subscribers and just said, this is not only is the stock in a downtrend, so it would be shortable anyway, but you went from 100 options to 19,000 options in 2 hours. You got to short the stock, and it opened down 20%. So you're trying to combine the charting with the option flow.
So
And
what other strategies then you're employing? So you're looking at the options, you're looking at technicals here. What stocks? Like first of all, like what types of stocks are you picking on? You're picking on only like a little more liquid stocks, like the movers of the day, or are you looking at some of the smaller stocks as well?
it depends on like when the market's dead like now, I'll look at the top 10. Let's say you use any platform, top 10, let's say that are movement. So the top 10, not percentage gainers, but dollar gainers. So I'm
Okay.
looking for things with their average true range or at least 2, because even intraday, a lot of times they form consolidation patterns. I'm very much into consolidation patterns. And my old boss at the day trading firm used to make us take the net change off stocks, because stocks that are down 5, the first thing everybody thinks is you got to buy them. They can't go down anymore. You can't even think of shorting them, and the next thing you know, they're down 10. So we try to go on a lot of consolidation patterns and not be a hero and try to pick a bottom or pick a top. So we're
So
very much into consolidation.
so intraday charting though, so you're looking at a stock down 5, maybe consolidating and now shorting it, as opposed to just chasing it when it's just in free fall.
No, I'm not good at chasing under the free fall. There's stocks, even Macy's, the last couple of days, that on a free fall, it still had on a 2-minute chart where it would have some consolidation. And then as it's breaking, you short the next leg. So usually in the free fall, it creates too much of an oversold. We wait for it to work off a little bit of it, even while it's still under a number of moving averages and ATR trailing stop, and then you jump on it again. And a lot of people, when it's down 2, are like, Macy's can't go down 4 points. And, it
Yeah.
went down 4 points. So we're very much into that. But I'm also into correlations a lot. So if I see, let's say the REITs are interest rate sensitive, and you see the REITs about unchanged, under chart pattern setting up, and out of nowhere the bonds go down 2 points. I'm talking about the ZB or the 30-year bond. Then you're probably going to see the REITs sell off. And if you were long the REITs, you better exit. So a lot of what we're doing is how to not lose your tail. So I really think one of the biggest keys of trading over 34 years is not to get hurt, because there's always a million opportunities.
So you're very systematic, you would say? Like, are you doing the same things, like looking for the same things every day? Are you like basically employing, the same types of strategies all the time? So very systematic?
I try to employ the same, but every day it changes. So I can get creative. Like today is very slow. We might instead look at neutral strategies like selling straddles or buying put or call butterflies for next week, because today's slow and Monday's off. So you really only have 4 days till expiration. So we'll do neutral strategies, but if the market looks like a trend day, we'll be more aggressive. And the other thing is that certain sectors can be in a trend day when the market isn't. The thing yesterday, the threat of throwing out an idea about a potential 5 to 10% tariff just whacked a lot of the retailers. So even though the market wasn't a trend day, the group was. So there was stuff to do in there. On the other hand, you had things like Google that were just sitting there like a bump on a log that were more advantageous to do neutral strategies. So we'll combine things. We're not doing the exact thing every day. We're looking for the same kind of patterns, but you have to change with what the market's giving you.
Question from the chat. You kind of addressed a little bit of this earlier, but Esteban is asking, what do you think of massive option orders when you're seeing massive, unusual option activity going against the trend? So stock getting killed, but now you're seeing massive call buying. What does that tell you?
I usually dismiss it. Now, I might be wrong, but what I do, I'm trying to be like the house in Vegas. I'm trying to go on probability.
Okay.
And it might work, but the probability is it's somebody trying to pick a bottom. Like my old day trading firm, you always had somebody go in and buy like 1,000 options when the stock's down 5, saying it's going to bounce. When it's down 7, they buy 2,000.
Yeah.
So basically, I'm just increasing the probability. It doesn't mean it won't work this time, but that just in the long run, it works better the way I'm showing it.
So you look at that like a gamble. Somebody's taking a shot here, maybe, and you want to be the one that's giving, or you want to be the house. So you're going to maybe provide the liquidity to that lottery ticket that they're buying.
Right, but I mean, from taking losses, I've just found that if you go through the takeovers that have happened this year, almost every one that had unusual call activity, the stock was near its high for the year, not near its low, because they're in a good business, so people want them. Now, that's different from the 90s when you had everybody taking the awful companies, trying to, buy them out just as not even a strategic. They were doing it then to fire everybody and try to turn it around. They were turnaround ideas. Now it's more you want to buy the companies that are doing great. And you'll see that the takeovers this year, it's really hard for people to buy new highs when there's call buying, but it works.
All right, we've been on the line with Chris Breter of Simpler Trading. Chris, thanks so much for coming on today. Have a good holidays, and we'll talk to you in 2017 if we're all still around.
That would be great. Anytime, I'm happy to be on.
All right, have a good one,
Thanks.
Chris.
All right, take care.
All right. Dennis, I wanted to ask you, actually, I meant to ask you about this earlier. Are you watching any nuclear names right now? And I only asked because Trump
tweets about nuclear, and we got to increase our nukes because everybody else is.
Well, that's not.
Should we be looking at uranium companies all of a sudden? Is that what you're asking me?
Well, there were a few stocks I wanted to look at. Uranium Resources,
bring them up.
Yeah, which is we got UEC is one, Uranium Energy Corp. So here's a 5-day 5-minute chart. We can look at URG as well. Here is that guy, and not much. I mean, these are all really small. really small
Yeah, I'm
stocks.
just looking at them too. It's a 99-cent stock. Could these be, the UEC? What was the other one you gave?
There's UEC, URG, and URRE, and they're all really small stocks, but they were all up
Yeah,
yesterday.
sometimes these are fun though. So UAC, I'm writing them down because I don't follow any of these companies. You're in the 50-cent stocks. URG, third one.
URRE.
URRE, and it's $1.43. You know what's interesting here? Well, URRE went yesterday. It actually popped 31% here. But yeah, the first thing I like to look at is the short interest on these things. So 8% short interest in URRE, URG, just bring that one up. It hasn't really gone anywhere yet. Short interest on this thing is only 3%, so it's pretty small. And then UEC was the other one. We'll just quickly check that. It hasn't really done much here either. You can take a shot. It's kind of interesting. This is all speculative capital, obviously, but if you think all of a sudden these Trump tweets might start moving, we did see the one move, URRE. Maybe there's some interest in some of these other ones. So I could see, something. You can see even back in June of this year, you had that UEC jump from like 80 cents to $1.50. That's the one thing about stocks that are under a buck. They can double overnight. So
Yeah.
that's just the way, the market works. When they're small like that, they can really go quickly. A lot of them do eventually go to zero, so you don't want to be caught really the last guy with them. But, could Trump tweeting, about nukes and all of a sudden, starts, tweeting it can't be bad for the uranium companies. So if he's going to really, continue to tweet about stuff like that, or was this a one-off and he's just, and they're going to say, okay, well, cool with the nuclear talk, because he's obviously going to be getting, advice from his advisors too. And I don't know if that tweet was that the only tweet he had? I did see it. It was just the one where he was
Yeah.
talking about, increasing the
Yes.
nukes.
Yes.
So, oh yeah, here it is. It was from yesterday. The United States must greatly strengthen and expand its nuclear capability until such time as the world comes to its sense regarding nukes. So that basically says we got to increase our nukes because everybody else is doing it.
Or you could look at a stock like GE. GE has some nuclear business as well.
So diversified though, like you want more of a pure play. So I
Yeah.
like the idea of you looking at these little uranium companies there, which have all been killed. So the URRE had a huge day yesterday. Maybe that was off of the Trump tweet. I don't know. I don't follow the little company specifically there, but I don't think it's coincidental that he tweets about increasing nukes, and then you have a little nuclear company go up 30%. So or uranium company. So something to think about. It's a good idea. Good
Yeah.
idea to look at.
We and EXC is another one. ACFN. I mean, just Google nuclear stocks if you don't know. It's basically what I just did because I don't follow the nuclear
Throw all
space.
that list in the chat too, if you can, Spencer, for
Yeah,
the
sure,
guys who are
sure,
in the
sure, sure,
chat, because
sure. I got
I,
you.
I like that. You're thinking outside the box. That's what I'm all about too, is trying to think about where the money is going to flow to. And when you can find these other companies that haven't gone yet, we just had Chris on talking about consolidation stock. It's been consolidated, hasn't been going straight up because I don't like chasing stocks. I mean, the URRE now you look at that one and that's up 50% here in the last day. So
Yeah.
now you're chasing it a little bit, but those other couple that you gave haven't really went anywhere yet. So who knows? Maybe Johnny come lately maybe comes into stock like that and says, "Hey, this thing looks interesting." So you know,
Yeah, it'll be interesting, I think, to watch this going forward. The last time the U.S. Um, disclosed its nuclear policy was 2010. That was like a 60-page report, and it took like a year to make. So we'll see if we get more elaboration on this from the new administration, but it'll be something to watch for sure. 8:34 now. We're going to take our final break of the week, and we're going to grab our next guest. He is Nate Toic. He's an investor and the founder of CompleteBankData.com. Great source for a small bank analysis. So we'll be right back with Nate.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
All right, welcome back, traders and investors. This is Pre-Market Prep. I'm Spencer Israel here with Dennis Dick. We're on the line with Nate Toic. He is the founder of CompleteBankData.com. Nate, how you doing? It's been a
Great.
while.
Great. I'm doing well. Thanks for having me on again. And hope you guys are all ready for the holidays.
Yeah, well, we're trying to get there one more day. Real quick, just give us some, for our new listeners who haven't heard you on, it's been a while, give us a little quick breakdown of CompleteBankData.com and what you do.
Right. So what we do is we pull in financial information on banks, regulatory financials, market financials, and we build a comprehensive overview of what this bank is. So we have a bunch of tools on top of the data. We have tools for trading ideas. We have tools for fundamental research, and then we have tools for bankers as well for peer comparison and things like that. So, really, it's pulling in this big data set and then deriving conclusions out of it to make money.
All right. So, what financial institutions are you looking at right now?
Well, I mean, banks have been hot ever since the election, and it's amazing because we had the interest rate increase, and everyone thought that was going to kill them, but the election news just supercharged banks, and the Nasdaq Bank Index is up 30% since the election, and so these banks are flying. And what's interesting though is there's still pockets of opportunity, and one area where I think there's some opportunity is there's a busted merger between New York Community Bank, and that's NYCB, and then Astoria Bank, and that's the ticker's AF. So New York Community Bank is they're communities in the name. They're almost 50 billion in assets, which is the threshold to be a systemic institution, and so there's a higher level of regulation, and that's really, you're kind of in the big leagues at that point. So they're right under the threshold of a large bank, and so they still call themselves a community bank. They have this niche business of lending to rent-controlled apartments and landlords in New York, and it's a great business. They had been known for years for paying the highest dividend of all bank stocks, and for a while it was yielding between 5 and 6%. They recently cut the dividend as they were going into this merger, but that could come back. So they tried to buy one of their competitors in the region, Astoria Bank, and they have about 14 billion in assets. And this was it was announced a year ago. So fast forward to now in this hot bank market, and they just called off the merger. And so they felt that they couldn't get the regulatory approval to get the merger through. And so now we have two independent banks. So here's where it gets interesting. New York Community Bank, they had cut their dividend, as I said, for the merger. They want to stay under that. Now that they're not going to be able to cross the 50 billion threshold with this merger, they have a lot of incentive to stay under it. And the way they could stay under it is by paying out most of their earnings as dividends. So there's a good chance that dividend's going to come back, and that stock has reacted pretty well. The flip side is Astoria Bank, which they've been shopping themselves for years. They have an appetite to sell. They were going through the motions to sell. They're now back as an independent bank. So you need to ask yourself, are they going to remain independent forever? I mean, these guys who are running it, you think they already had one foot out the door. They're already thinking, I'm going to be getting my payout. What am I going to be doing? When am I going to hit the links? And now it's back to the grind. It's banking as usual. So you say, how long are they going to remain independent? Probably not long. Someone else will come along. And so, I think for investors, they're not going to receive a buyout offer that's less than the current price. So that's a good bet. Buy it, wait, and good things will happen.
Nate, why is it that they thought the regulators wouldn't approve this merger? Because if that was the reason that they called it off, was they didn't think they get regulatory approval. Why did they think that?
I mean, we don't know. So they didn't release anything to that effect. My guess is that once they cross that threshold, the regulatory costs were going to go up dramatically. And there was something in there with, whatever the risk level was that they didn't want to see. And they felt that two independent institutions would be less risky than one combined institution in that New York market.
So you look at this NYCB here now, just focusing on that one, and it has fallen from 17.5 down to 15.91 on this merger, obviously not going through. Do you think, this is an opportunity right here, right now, or would you be waiting for more of a pullback?
I think this is a great opportunity right here. So if you go back, if you look at the 5-year chart, and last year it was up across 19, and so we're at 15, and
in a better regulatory environment.
Right, yeah, and investors were excited at 19 last year, and so there's some turmoil. What happens a lot of times in these trades is you'll have a lot of merger and arbitrage funds that come in, and so right after the busted merger, where it's called off, there's a lot of selling because these guys want to get out, and they're not interested in what's going to happen 3 months, 6 months, a year from now. That it failed, they're out. So there's a lot of selling pressure on both sides, and that's where there's an opportunity for investors.
I don't know if you follow this company, but we're getting some tickers here from the chat, and it's another banking company. They want to know about BKU, Bank United. Is this one that you follow?
I've heard the name, but I haven't followed it closely.
What other banks are on your radar?
So I've got another one that I think is interesting. It's smaller. This is BNC Bancorp. It's BNNC. This is a $83 or $85 million bank out in North Dakota. These guys, they really were hit hard in the financial crisis.
What's the symbol on this again? Because I'm not able to bring it up.
BNNC. Maybe. Wait. Let me see.
BNNCP maybe.
BNCN. That's
BNCN. Okay,
yes.
That's it. Got it.
So they flew with the North Dakota oil boom, and then obviously there's been a little lull. So what's interesting here is half of their assets are in securities, low yielding securities, and they could be lending those, which would pretty much double earnings. And there's now an activist involved, Rangeley Capital, that's been pushing on management to do something. So I found in situations like this, when you get an activist investor in these bank names, it's just a matter of time. The clock is ticking and something will happen, because this pressure doesn't ease up and it only gets worse. And so the bank has to respond, and they're either going to sell themselves, they're going to bring in an additional board member or two. Something will happen. And this is only great for investors. So in our model, if you were to look at them on an acquisition basis, if they were to be acquired, they'd be worth about $160 million, so double. If they were to be acquired and all of their securities put to work, potentially over $200 million. So there's a lot of upside in this name.
What do you think about the sector overall here? Because a lot of people are concerned to be buying. Even this one here, it's moved up from $25 to $32 on the Trump basically regulatory environment, and since the election, and a lot of the other banking sector, like you said off the bat, is up 30%. Are these stocks a little bit too lofty here now? A lot of these other ones to be coming here buying. Are you late to the party, or do you think there's still more upside in 2017 for the banking sector?
I think there's still some upside. You have to be a little bit pickier. So. What we saw, if you were to go back 6 months, there was a lot of banks trading below book value, which I think was just too cheap. So a lot of this quick gain has been almost to get to almost like a normalized level.
Price. Gotcha.
Yeah. So we're at a normal level. So the opportunities aren't as great as they were 6 months ago, but there's still a lot of stuff. What I would caution is, with rates rising, to avoid banks that 2 years ago, they went as long as they could on their loans and their securities to juice the interest a little bit, because those guys are going to be getting hit hard. And those earnings aren't out yet. So a bank that went long on their securities, and their securities is really the biggest thing. They could have a mark-to-market loss after the rate rise, and that's happened in the fourth quarter, and people haven't been releasing those. So we still have a couple days left in the quarter. So I think some of those banks, there could be a bloodbath, and everyone else who stayed short, which about 80% of the banks in the banking sector, both public and private, had kept their securities within a year. But those other 20%, there's going to be some heartburn.
Nate, you have another website called oddballstocks.com. Tell us a little bit about this.
Yeah, so I besides banks, I like to look for unusual stocks. And these are stocks that are off the radar of most investors. Oftentimes they're illiquid. Sometimes they're just unusual. For example, this is a bank and kind of an oddball stock. I ran across Mechanics Bank. So that's MCHB. Their share price is $28,000 a share.
Whoa.
And so
holy cow.
It's crazy. There's a few hundred stocks with share prices over 250 a share, and Berkshire Hathaway's the best known name. But there's a ton of opportunity here because it's hard to trade these things, and people automatically shut off high price stocks. So if someone's looking if they just want to find an unusual name, start searching for stocks that are trading at $500, $1,000, $2,000 a share. Almost all the time they're undervalued.
What's the spreads though like on that? Like, is there any liquidity? Can you even buy the thing, or is it like $1,000 spread just to even get in or out of it?
Right, that's a great question. So from what I have experienced with these names, oftentimes there's hidden liquidity. And so what this is excuse me, no liquidity shows up until you put a bid out there. So say on this, you would put a bid out and say, I want to buy it at $28,000, what the price is. There might be no ask until your bid hits, and then suddenly a couple shares show up. You say, well, why wasn't that quote out there? If a market maker is holding less than 100 shares, they aren't required to post post a quote for those shares. So in these names, someone might have inventory, but they're not showing that they have the inventory.
So is this one that you're trying? Like, this traded one share yesterday. I mean, this MCHB, like, this is the definition of the most illiquid stock I've ever seen in my life. It traded one share, not 100 shares, one share. One share,
yeah. There's a lot of stuff like this. So I'm not in this name, but there's other names like this, and I find these fascinating. Yeah, and so another source of liquidity in these sort of companies is the company itself. So if you own, say, 10 shares in Mechanics Bank, a lot of people would say, well, it's, I'm going to have to wait 10 days to get out of this thing.
Yeah, that's what I was thinking.
Yeah. Oftentimes you could call the CEO and say, look, I've got 10 shares. I'm interested in selling. And, will you give me a fair value? So a lot of times the company will actually pay over the market price. It's just a privately negotiated price, and they'll pay, and they'll take your shares, and that's a buyback on their part.
That's a definition.
Nate Toic, you just heard about oddballstocks.com, also completebankdata.com. Nate, thanks for joining us today. Have a good holiday season, and we will talk to you in the new year.
Great. Well, thanks for having me on again, guys.
All right,
Appreciate it.
We'll be watching those banks right along with you going forward. Nate
that is a definition of trade by appointment only right there. One share that thing traded yesterday. So do not send market orders on this type of stuff, guys. I mean, this is the ultra thin. I've never seen a stock that thin. That's crazy.
The chart we have up now is a 3-year chart, which is the most I could do to show some sort of movement in this thing.
It just doesn't trade.
Some sort of volume. Anyway, let's look at some imbalances, Dennis. We haven't looked at imbalances yet today.
Okay, so this is a very quiet morning. I mean, S&P futures are flat. So you're trying to get a feel for, is this going to be risk on or risk off? It looks like a nothing day, and it's rare to just see a nothing day. But financials looking a little bit weaker here in the pre-market. Looking Bank of America has 206,000 to sell, so that's somewhat significant. But it's so small, it's so early. You're trying to find, is there a leader today? Oil's down just slightly, so you think, okay, well, maybe some of these oil stocks, Chevron has 34,000 to sell, ConocoPhillips has 35,000 to sell. And then you automatically always look at the TLT, it's up a little bit, but it's such a quiet morning. It's so hard to get a feel for whether they want to, put some money to work here, or whether, it's going to just be one of those, just quiet days and nothing's going to happen. So then
I wanted to ask you, on days like today, what's your approach?
You kind of got to go to where the movers are. You kind of got to go where the action is because if the stock doesn't move, it's hard to make money. So, I'm looking here a few stocks. Twitter's first of all, because Twitter did go straight down the last 2 days. It's still going to be some volatile. It's already traded 82,000 shares this one. It's down another 1.5%. The 16 is a big level here, but we bounced off it yesterday. 16.20. It's funny how these levels, and Joel, was the biggest level trader of them all. He's always looking at the levels, and you got down on the 14th of October to 16.28. And yesterday, you perfectly get to that level, 16.27, we bounce. We're taking that out here today. So now if you start thinking, well, if we go through 16, now you start thinking, well, we're going to go through 15. I mean, this stock is in a world of hurt right now. So I think on any rallies here on Twitter, I think it's met with sellers here. So difficult. Like even when there was a rumor, kicking around inside that Disney might be sniffing around, the stock can't even get out.
That is nonsense. The report.
It was nonsense article, but at the same time,
I want to talk about that for a second. Yeah, okay. I want to talk about that. That was a report from Betaville that said that Disney had what was it that they'd pulled out of the talks. So they had pulled out of the non-existent talks that were non-existent as of 4 months ago, right? The whole thing. I would just say anytime you see a Betaville report on Twitter, to just ignore it. Or go the other way. Fade it.
But the one thing what I want to say is just how sentiment has changed, because that Betaville reported that a month ago or 2 months ago, and Twitter got a big pop on it. Twitter popped 6-7%.
Yes.
So now obviously nothing materialized from that. They're like, oh, this guy's reporting on this again. So they've actually hit the stock down here now. But just technically speaking, it's been on 7 days in a row. It's broken right now. This is a definition of a broken stock. Everybody who is banking or thinking eventually they're going to get an offer and how low can it go is getting punished here right now. And you also think, where are we coming into? Seasonality, tax loss selling. Everybody's sitting on loss on Twitter. So you want to look at maybe if you're going to do some tax loss selling here, you think if the rates are higher right now, it's going to be better to sell by the end of the year. This is a stock that's going to continue to probably remain under pressure just because of the seasonality, because it's tax loss selling season, and this is one. There isn't a lot of stocks that are down significantly this year, but this is one of them.
All right, chat buzzing right now. Stick with Twitter for a second. Do you like it at 14 still?
That was the big level. I think that's where you have a huge level down there. It's a valuation issue for me on Twitter. And just why I said, Twitter actually isn't down on the year, but Twitter was trading higher for much of the year. So the majority of people who bought in the last 3, 4, 5 months are down. So just correcting myself here, because it started the year down around $15. So it's actually still up for the year. But I would say there's a lot of people who are down in Twitter. If it got down to 14, maybe the first time, but I'm hands off on this thing. This thing's in free fall right now. I'm not going to try to call the bottom and say, okay, this is it. I'm going to let the dust settle on this thing, because if you were doing that yesterday at 17, thing is almost at 16 the next day. So I'm more apt to sell bounces in this thing than to buy the dips or the sell-offs.
What else we got? We got Dennis. Can you look at GSIT for us?
GSIT. Wow, that's a mover. That thing's been straight up like a rocket ship here since Trump. $5 when Trump got elected. It's now $6.23. Lower volume stock, doesn't trade a lot here. Double top from the last couple of days, 623. I guess if we can get above the 625 area, then it continues. The trend is your friend here, so I'm not going to fight that trend.
And do you like Wynn, or do you have thoughts at all on Wynn, aside from the fact that they had nice casinos?
Yeah, well, we talked about yesterday, and it's been in a range the entire year, and I talked about this range. It's basically been in a range from the lower 80s to the 100, 102, 103 area, and we got up there a week and a half ago, up to the 103 area again, and we failed again, and then we sold off, and now we're coming back to the lower end of that range. So I think as the stock is down to 82, 83 bucks, it's probably another buying opportunity, but I do see some room to the downside still here on Wynn. Will I be coming here short? I don't know. You could say from a 3-day chart, if it breaks below yesterday's low, it's kind of in breakdown mode again, 87.70, but I like it down in the mid-80s.
ELLI.
Well, throwing the tickers at me here, Spencer.
Yeah.
I'm throwing some thin ones here too. Eli May. It's consolidated, major overhead resistance around 85 bucks though, so hard to just jump in here. I think you got another $1.50 maybe on the upside, but there's so much overhead supply there. You topped out $85, $86 multiple times in November, December, and when they top out that many times, they sell off, they come back to the level, they usually fail there again. So there's so much overhead supply, it's hard to jump in here now.
All right, 8:55 now. A few more minutes. This is going to be a quiet day. I feel like we've had
Oh, these days, and
we
just talking. This is the one of the quietest days of the
yeah,
year.
but I just feel like
So
it's actually been an unusually busy week in terms of news for this time of year. We've had a surprising amount of news this week, both within Benzinga and then in the markets in general. But today, I don't think we're going to follow that script. It'll be pretty quiet. Maybe we'll all just leave work early today. What are your plans, Dennis?
the, you're gonna find pockets of action,
Okay.
and that's what I've got scanners for to try to find where there's pockets of action,
Yeah.
so I can find something to trade. I'm not gonna sit in here if the stock's not moving. I'm not gonna be trading it because
Yeah.
it's hard to make money when the stock doesn't move. So some of your traditional strategies where I'm buying what's on risk off, risk on, risk off. I mean the market's flat here, so there's not much to do there. So you got to go look, maybe to some levels, maybe to some technical levels. Maybe there's a play in that Lockheed Martin versus Boeing here today. Lockheed Martin's now down $5.78. Boeing's trading up 74 cents. So you're talking about 1.5. You're talking about 3% move here now off of a Trump tweet. 2.3% down for Lockheed Martin, about 0.7% up for Boeing. So there's maybe an opportunity on the fade side of that. That has worked in the past, and what works in the past doesn't always work. Maybe there's some sympathy moves here with Lockheed Martin this morning. General Dynamics is trading down slightly here in the pre-market. NOC, which is Northrop Grumman, is trading down significantly. It's down 5 points here as well. So looking at that, you think, okay, well, those are, three stocks that do tend to move together here. So I'd look at General Dynamics and NOC as possible sympathy moves here this morning with Lockheed Martin.
And then just looking at like ratings land, for example, it's super quiet today. We have Breen downgrading Time Warner from buy to hold. No price target on that. There's like one more. We have an upgrade to Skechers. We have I had a couple more. UPS initiated at hold. I mean, who cares about hold ratings? Really, no one. But it was super quiet in ratings land today. There's one piece of drug data from yesterday. I'm pulling that up right now. Do you remember who that was, Dennis? Because I actually wrote
SGYP.
Thank you. That's what it was. SG. Yeah,
And that got a little lift. Yep. But it's just kind of hanging out too. It's up 5% in the pre-market, so there was that little drug news there. There's some smaller companies moving here as well. Yep. Like I said, there's some pockets of action, but overall, this is one of the quietest days of the year. So don't expect to set the world on fire on days like this. Although sometimes there can be opportunities where there's a little less liquidity. Sometimes you'll see those pockets of action can really move, and sometimes stocks will overshoot a little bit. Maybe even in the case of Lockheed Martin, maybe even overshoots a little bit more, just because there's less liquidity on a day like this.
Yep. All right. I think we've about exhausted our
talk about everything there is to talk about.
Our time this week. I just
you have reached the end of the internet. You have seen all there is to see.
Have you ever been there? There is a link, the URL there.
The end of the internet.
The end of the internet. Yes, it says congrats. You've reached the end of the internet. We've reached the end of our show for the week. I do want to note. Notice how Joel goes out of town for a week, and we have. We don't really have any technical problems. We had Dennis cutting out like once or twice yesterday, and a slight echo thing today that we seem to have worked out, but no like major technical problems, and that's because I know what I'm doing when I do this.
Poor Joel,
not so much. I think Joel will be back on Tuesday. That's the plan. You never know if he'll decide to just ditch us and stay in Florida forever. But that's it for us for the week. Thank you, everyone, for listening. Wow, Rob Hood says low blow. Yeah, maybe. He's not here to defend himself, though. So that's it for us for the week. Hope everyone has a good holiday weekend. Merry Christmas to everyone who's celebrating a holiday out there. And hope you join us again on Tuesday. We got a full slate of guests next week, which will also be a rather quiet week, but we do have Alan Brockstein and Nick Shaheen on Tuesday, and Michelle Krebs, the auto analyst, on Wednesday, and Phil Davis on Thursday. So good slate of guests for you there.
Again, market closed on Monday as well.
Yes, market closed on Monday. Don't tune in. We will not be here. Have a good weekend, everyone. We'll be back with you on Tuesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.